one of the things that you raised is the conservatism of banks as regulated entities. Do you see that conservatism as somewhat of a, not a roadblock, that's too strong of a word, perhaps something that makes them hesitant to venture further into wealth creation or wealth management?
Yeah, absolutely. I mean, look, I'm the late stage startup non-bank guy asking banks to be more risk seeking rather than risk averse. I totally get that. I grok that fully. I understand it. But at the same time, you know, I grew up in an era in startups in the wealth management space, investing space, dealing with the SEC, dealing with the Department of Labor, dealing with FINRA. And there were pretty tough times where we didn't really have a choice but to be risk seeking, because to differentiate and offer products that would grow and do things our competitors weren't doing, we had to take those battles on, right? They're we were one of the first companies that taught FINRA what unit testing and functional testing was, so that we didn't have giant quality assurance teams of people to validate every single change, because that was expensive and that would slow things down. And those are tough, arduous conversations. And I'm not trying to suggest that banks have to take on the burden of redefining what it means to regulate them by their regulators. But I often feel, and I'm not going to share too many precise examples because I don't want to throw anyone under the bus, but there are definitely a lot of moments I run into, even with the banks seeking fintech partnerships, where suddenly it gets just a little hard, and it often feels like, rather than have a tough but very doable conversation with the regulator to do something that feels a little new, it's just no, thank you. We're not going to pursue that approach. And it's a little bit of a weird experience for me to be hanging out with a chief deposit officer and a CEO of a bank, and a director of risk, and the director of risk is trumping the CEO and the head of deposits.